there are some questions from the audience, so I'm going to try and read and direct to each of you. And maybe I will first read the questions to each of you and then get each of you to respond after I've gone through all the questions so that we can better utilize the remaining time. So there's a question from Pierre Monin for you, Luis, and he's asking sort of how can new fintech solutions help central banks reach directly low-income households and thus avoid loss of monetary policy transmission through financial wealth effects. There's a question to you, Leora, about whether there are any countries that have used the pandemic as an opportunity to put in place regulations that have particularly benefited women who have been disproportionately impacted, and what is the one of the top regulations that countries should make sure to put in place. Camille, there's a question to you about what can the Fed do differently to support poor households going forward, given the limitations of, I'm adding this, but given the limitations that you noted of the response so far. And then Luis, to you as well, the recent evidence seems to indicate that deeper financial systems help reduce poverty and inequality in developing countries, but also that rising inequality, there's rising inequality in various financially advanced economies. What could be the solution for the latter? How can we make deepening of the financial markets more equal? And what's the BIS thinking on this? And let me throw in a question of mine for Rob. You discussed the potential impact of CBDC, of a central bank digital currency, through, in particular, the savings channel, let me call it that way. But what would happen if that CBDC does not pay interest, right? Many of the central banks that are discussing CBDC are not thinking that their CBDC would pay interest. So would we see any benefits from CBDC in that case? So let me just open it up to each of you in the order that you spoke so that perhaps you can address these questions, and then we'll see if there are more once we're done and hopefully stay within the time frame. So I'm going to ask you to be as brief as possible, starting with you, Camille. We have
great.
10 minutes
so
left.
the question that I'm asking is, what else could the Fed do to target inequality? And thanks for the question. So I think in addition to what Rob mentioned, I would mention three other things. The first is, as everybody knows, mobile money is lags. The use of mobile money lags in the US compared to the rest of the world. And certainly there could be advances there. And I think the Fed could lead the charge with other regulators. And that would, of course, be subject to the appropriate kinds of consumer protections with respect to conduct and data privacy, et cetera, that Leora mentioned. I think number two, and this relates to Luis's presentation, I think there's certainly a very orthodox view, I think, in the US of the kinds of targets that the central bank should have. And I also think it's possible for the central bank to think about other targets, such as focusing on labor participation rates for particular groups. So in the US, the labor participation rate for Black males is extremely low. And if you were to target that, a number of other kinds of policies would have to be put in place in order to make sure that that target would reach the appropriate levels. And I do think there's scope for the Fed to do something like that and get the ball rolling. Third, I think has to do with the way the transmission mechanism depends very much on the value of assets, particularly household assets. In the United States, and this is very peculiar to the United States, there's a long history of discrimination around housing assets. And so you can have homes that are identical but owned by Black households or white households, and those will be valued very differently. And so I think there's a role for the central bank to play in researching how to create equality among those assets so that the transmission mechanisms tend to work better in the long term. And I'll stop there.
Thank you very much, Camille. Luis, you want to come in on your questions?
Yes, so, well, thank you, Pierre and others for the question. I think what we are observing is in terms of financial technologies and infrastructure helping to reach directly poorer households and SMEs is the various issues that we discussed, and Camille, Leora, and sort of Bob mentioned. The technologies in terms of virtual banking, digital ID, using big data to improve credit ratings, the role of platforms. I think all this is contributing to increase the speed, fast payments, PICs. All this is contributing to increase financial inclusion and the speed of transformation. Now, what I think Professor Townsend mentioned is important. We need to move beyond the sort of natural Kuznets initial effect, which would be benign. I mean, if you do have a Kuznets curve that sort of goes up, but then quickly goes down with financial inclusion and all these technologies, that would be a sort of a collateral effect that we could admit. The problem is if these technologies bring more segmentation in terms of market, and it brings actually in the long run, in the medium long run, more inequality that sort of builds in. So I guess the policies that we are all thinking about is really to make the technology really a public good, to favor a level playing field, so that the access to the technology is widespread, and sort of the cost of accessing the technology is lowered on a permanent basis for lower households. And I think this goes hand in hand with what Camille was suggesting, is that by doing that, you do improve the transmission of your policies, both on the monetary side, but also on the fiscal side, because you have more capacity to diversify the instruments with which you are taking policy action. And if on top of that, you are coordinating them in a more targeted way, but at the same time in a more efficient way and with more speed, that's a win-win for society. I think that's what we are all looking for. It's this combination of having the technology, the infrastructure as a public good, a widespread dissemination of these positive externalities, a better way to target specific groups, and therefore you are at the same time augmenting the macroeconomic effect of the transmission, which means all your fiscal multipliers and also your consumption effects and so on and so forth, while at the same time you address the right pockets and the right groups that need to benefit from these policies. So that's a kind of win-win that regulation and the action of policymakers should be targeting. And I think it's possible. It's a matter of, let's say, really making sure that we understand the transmission mechanisms, we have the right tools, and really we activate them on time.
Thank you so much, Luis, for that intervention. Leora, do you want to address the questions that were posed to you?
Thank you. The question around how to target, whether policies are targeting women. So you know the World Bank's documented hundreds of COVID-related relief programs. We don't yet have a good mapping of whether the payments have been made in cash or digital, and it seems that in many cases, mixes are being used. But certainly, we are learning what's important for the successful shift from cash to electronic payments, so both transfer payments, but also, as I mentioned, salaries in the apparel industry, factory workers, in agribusiness chains as well, from tea pluckers to other farmers. So, requirements, so for example, to ensure that agents and merchants who provide cash out services are deemed essential businesses during any lockdowns, that banks are available and lenders to provide liquidity to these cash out agents, and we know that merchants' sales are falling and are hoarding cash, and there have been liquidity challenges. And again, to reiterate the importance of consumer protection, especially when we're digitizing payments to the most vulnerable populations, to ensure there aren't predatory fees, for example. And then certainly, and even more so in the case of salaried workers, to make sure the regulatory and tax policy supports merchant payments so that people have the option to keep their money electronic.
Thank you, Leora. Thank you so much. Rob, you want to come in on the question on CBDC?
Yeah, sure. Thank you. So through the lens of that model, the CBDC in terms of currency, the benefits coming from twofold, really. One is just easier to access financial infrastructure, so that cost disappears, and that's a benefit. And it is also true that the incentive to do things through the bank has to do with the interest rate, as opposed to if you equalize the rate to zero, the same as currency, then there's really no portfolio advantage. So you're correct. However, I think we need to think more broadly about CBDC. It's used quite generally. In fact, I'm afraid often introduced as a concept in experiments or in reality without thinking through all the potential of the technology. So if you think about the potential to create better financial infrastructure through programmed contracts, then lots of good things can happen. The credit aspect in the model is only one of them. In general, one could do much more. I mean, back again to the financial accounts, sort of the ledgers, Bitcoin blockchain and the ledgers. The ledgers are accounting ledgers, which sound boring, but it's a way to organize data. So thinking about improving the information infrastructure in the US through the lens of what we've learned, in computer science and so on about asynchronous and synchronous access. And again, the cryptology aspect of Bitcoin is much more general than just that coin. It's a widely available technology, fully homomorphic encryption and multi-party computation, and that can be part of building a better infrastructure. So I'm not negative about CBDC, but I think it's really important to, rather than thinking about a technology, now what do we do with it? And it's the other way around. We think about the economic problems and we grab the relevant pieces of the new technology to help solve those problems.
Thank you very much. And we are right on time. I want to thank the panelists for excellent presentations and interventions to answer the questions from the audience. And I also want to thank the audience for being with us this morning and sharing some of your questions. So with that, I'm going to bring the session to a close. And thank you, everyone, and hope you have a wonderful rest of the day. Thank you, Luis. Thank you, Rob. Thank you, Camille. Thank you, Leora.
Thank you. It's been a pleasure. Thank you.
And thank you, Lily, for helping us with technology.
Thank you.
Bye, everybody.
Bye, everyone.